Hey guys, welcome back. In today's video, we are talking about short swapping shares, the capital rotating to AMC, the short squeeze trigger, and many more in this video. First, we're taking a look at this. Firstly, what we are looking at is another article which has incorrectly stated things about AMC. And you can see in this article, it talks about how AMC climbed 7.6% midday to as high as 1.51 on Wednesday, with 21.96 million shares traded, about 48% below its average session volume. Now, the truth is, AMC traded 70 million shares yesterday. So we see a massive difference. Now, the only reason to me for why it feels like they use 21.96 is because they are then able to add on this statistics afterwards of 48% below its average session volume, which of course is totally not the case, but for them, it might make them feel like they are professional and of course gives the same thing that they've wanted to do for the last 5 years of the negative connotation on AMC. Because on this article later on, some of the other quote unquote key points they are trying to make is about how analysts are largely bearish, talking about how company fundamentals remain weak, and then 5 stocks we like better than AMC Entertainment. So that was all in this article, but they started it off with the fact that AMC traded 21.96 million shares and about 48% below its average session volume. So we know that clearly it's not the case, and they don't understand what's going on. They realize is that if they were to say AMC traded 70 million and that the overall consensus was that it was bullish, that allowed the price to move up, it will show that there is so much volume actually wanting to buy AMC. Because this goes on to the next point of them talking about analysts are largely bearish, because if they are bearish, then you'll typically see large volume days on AMC going down. You want to see large volume days on AMC going up, because that would imply that people are actually bullish. And so this is what we talk about with the ridiculous articles. Multiple articles were actually released yesterday as we saw AMC do well. We saw another one where it says why AMC Entertainment dipped more than the broader market today. Now, already this was stupid, and because they then have the AMC ticker symbol, which says it's plus 6.52%. So I don't even understand the reasoning for why they're doing this, and to me it feels like they're trying to bet on people just kind of skimming past the titles, not paying attention to others, and kind of just going through their brain that, okay, AMC's down today. And so, this is the fact that they're trying to feed you guys, that they're trying to put out to the public. And it's why we've said you always got to do your own due diligence, because we've just shown you how every time we see AMC have a good day, so 6.52%, we are then bombarded with false facts to try and bring AMC down. And this is what they try and do all the time. What they should be talking about is, of course, the dark pool, where we're seeing 40 million volume and even more, disappearing away from AMC. The very fact that at midday, we saw 83% and 30.78 million volume gone into the dark pool, you should already understand how ridiculous that is. And that should be what these articles are covering, in terms of, if they want to talk about why AMC did dip, maybe mention the fact that we are seeing 83%. And if they want to talk about, all of this volume, all of these bearish, why don't they talk about the fact, the reason why we're seeing AMC going down is because we're seeing facts like this. And so this is what they're trying to avoid. We've already said this countless times. Firstly, we talked about these articles in terms of the effects they can have on the algos. There are algorithms out there which are designed to look at news articles and base the sentiment off of titles to then make a trade. So if they continuously make these articles about AMC and give it a negative title and write false facts, whether it's true or not, and but it's negative, and that's the most important factor, then it feeds into these algos to get them to actually short AMC. There are also other factors for why they're doing this. Obviously, they're trying to push anyone from buying into AMC. There may be new investors who want to look for investments, but if you don't do your due diligence, or if you're just looking through things and the only thing you can find about AMC is constant and negative articles, you would think that AMC is a bad company. But of course, for us apes who've been here from the very start, who've done our due diligence, we know that that's not the case. But for someone who's not willing to do due diligence, or for someone who's not been in here for so long, if you just search up AMC, you're not seeing much positive things, and that pushes them away. And that's what we've said with how these guys are trying to use the media to obviously create a completely false narrative on AMC and how they fail to talk about all of these other things. Because another point that we made in terms of what they said about analysts are bearish is they are not talking about the fact that whilst people are trying to say analysts are bearish, we're seeing institutions buying more and more. An example, as Penwater, Discovery, and UBS taking up huge positions in AMC recently, will some of these shares be swapped by them later to others in desperate need and make AMC MOAs faster and higher as they don't swap them cheap? So firstly, they don't talk about how we're seeing companies like Penwater, Discovery, UBS taking up these huge positions. And we've talked about how this is very significant, especially the fact that we've seen, firstly, not only just institutions come into AMC buying up large amounts of shares, but we've also seen institutions who were previously short on AMC to get rid of their positions and buy AMC. That should be something that should be talked about because that is showing how they are not bearish, but actually bullish. And so this is what they failed to say. Now, another thing that I find interesting here is obviously talking about swapping the shares. One of the things we've mentioned in the past is about these OTC trades, where we're seeing institutions essentially trade share from one another without going to the exchange, without going to the broker. They are just trading shares through one another because that allows them to trade shares at a ridiculous price without actually having an effect on the market. We've seen these being done before in the past. We've seen data which has shown us this has been done in the past. But one thing to mention is that when it comes to the time where these shorts desperately need shares, would then these companies take the opportunity and obviously swap these shares at a way higher cost than even the market price, but that will actually allow the squeeze price to get even higher. Now, typically, we've seen institutions work with one another, but in my personal opinion, I feel like when it comes to it, when the squeeze does happen and it's everyone for themselves, these institutions will probably do anything to maximize their gain. And this is something that we may, of course, see. Because another example is, remember that large short position Bank of America had on AMC? If they're so bearish, why do they hold over 3 million shares? Firstly, is another example of how they're trying to claim people are bearish, yet we're seeing all of these institutions buying. But another big important thing of why I think they're holding on to it, and it goes back to what I've said here about swapping to others in desperate need, is that it feels like to me the reason why Bank of America is buying is because they are trying to also protect Citadel. We know that Bank of America is the prime broker, prime lender to Citadel. And we also know Citadel has a massive AMC short position. And so it could be perhaps that Bank of America wants to buy into AMC, so potentially they could lend to Citadel. Now, this is also seen in terms of Citadel's demand for AMC, because recently we've talked about how they want to increase and have increased their ownership in AMC as well. Once again, kind of defrauding the bearish analyst estimates on AMC, but also just talking about how institutions are constantly trying to accumulate as much AMC as possible. One thing I wanted to mention is in the current market, we're seeing, firstly, the whole market is flushing. However, we're looking at Bitcoin dropping tremendously. We saw it break below 65K. We even saw it go to 62K. And the big thing is that we have seen how crypto market officially loses over $300 billion for the day. So this is obviously, insane, and we're seeing $2 billion worth of levered position have been liquidated in 24 hours. It's very likely that it's only going to get bigger. Now, the reason why that's important is because, firstly, if we take a look at the drop in crypto, what we've seen is that how Bitcoin dropping corresponds to $190 per AMC share. And that was when Bitcoin dropped to 72,000. So imagine how much it can be for AMC now, especially what we just said with over $300 billion disappearing. And it goes back to what I was saying in previous videos as well about the capital rotation. Previously, what existed in these markets, the money that was there, they were borrowed as collaterals to short AMC. As we're seeing the capital being rotated out, as we're seeing the collaterals dropping in value, it has to go somewhere. And this is what we've said, when they can't contain any AMC anymore, what you're going to be looking at is how the money is going to transfer from one place to another. This case being whether it's AI stocks, whether it's crypto, into AMC and GME. And then you can see, it's always fascinating how shares magically appear right when shit is about to hit the fan. Then when no one wants to touch them, the rate magically cuts in half. what we're looking at is the shares available for AMC. So firstly, we just talked about this, the capital rotation from Bitcoin into AMC. And now we're seeing that they're trying to obviously prevent that from happening. Is why we see the shares being borrowed so extremely. And this is what we've also seen in the past before. But it's just another example of how the demand for AMC is there. People are trying to say there is no demand. People are trying to say no one wants to touch AMC. But clearly, the volume, firstly, dictates that there's people in AMC. Then the shares availability is also showing people's demand for AMC. And what's important is that actually, what we're looking at is how when it goes to 0 availability, we're seeing 0.72, and then when we suddenly see 1.6 million shares available again, it goes down to 0.57. Now, bear in mind is that if the demand is there, these rates should be continuously going up. And this isn't by shares being returned back into the pool. What it feels like for the fact that suddenly shares available spike up from 450,000 or even from 0, as a matter of fact, to 1.6 million, and we're seeing the cost of borrow to go down, is that actually they didn't return the shares. The previous 300,000, 1 million shares that were borrowed is still out there, but they rehypothecated and made more synthetic shares out there. And that's how, because by increasing the supply, by rehypothecating and having these synthetic shares, you can obviously decrease the fee. And it seems like that's what they're doing. But like we've said, that's only going to make matters worse. 200 million legally shorted shares, but billions, trillions, quadrillions in naked short. And we talked about all of these naked shares created. We talked about the quadrillions of tokenized shares. And so you can see about what's going on. Going back to what we've said here with how the synthetic shares are being created. Yes, they can use it and suppress it from the time being, but it's eventually going to stack up. And it's already stacked up to this much. And it's why I was saying we can easily see the money being rotated into AMC because of how many synthetic shares there are. And you can even see from the comparison, firstly, today we saw AMC down, but the rest of the market, in terms of within the same industry, we're seeing them go up. Now, bear in mind, we've obviously talked about how well AMC has done. We talked about how efficient they are. Yes, there are still flaws within the companies. That is, of course, 100% true, but it should still go along with the market. And not to mention, this is happening when AMC has an 80% dark pool and Cinemark and IMAX has nowhere near that number. So short interest for AMC is likely to be climbing higher, showing above Jan 15 borrow rate levels. Despite the 7% move yesterday, it looks like short interest is still up there. So even at times like this, we're still seeing short interest increase. And that just goes on to talk about how this is the suppression that we are, of course, facing. Now, Michael Burry has dropped something interesting, and I think that this is very, very important to note. Firstly, he's talking about bring this up again because if GME can deploy a large amount of capital at such a point as this, it will do far better than employing capital in an expensive market. Now, essentially talking about a post in which he posted his a thing he wrote back in 2008 talking about the whole crash, of course, what he's infamous for. And the thing is about this is that he's trying to say right now, and with what you saw today, we're seeing, Amazon failing earnings and going down 10+%. We're seeing the market we're seeing the Nasdaq and S&P falling 1.5%. We're looking at all of these other tech stocks falling 5-10%. At a time like this, we're going into that whole pullback correction where stocks are being extremely cheap. And at a time like this is where everything's on a discount. And so if GME having a large capital is able to utilize this opportunity, they are obviously able to be doing extremely well. And that's what Michael Burry is hinting at. And I feel like they are able to do something that is very, very big. And it's why it's suggesting, in terms of, to me, why all of these firms are suddenly starting to buy all GME shares. We're seeing Northwestern Mutual increases GME. We're seeing and other firms increasing their shares as well. So it's very understandable why this is happening. Another thing we're looking at is, firstly, Morgan Stanley quant warns of $10 billion in forced systematic selling. Retail buyers absent. So now they're worried and now they want the retail to bail them out. So what they're essentially saying is that with everything that's going on right now, we could be seeing even big of a downfall. What we're looking at the market right now is in the end, and it's going to drop even more. And so at times like this, what they're trying to say is that they need retail to put the money back in to bring the stocks back up. But now they've realized also is that we know what power we have, we know what we can do, but we're obviously focusing our concentration in areas where we believe, which is of course AMC and GME and potentially some others. Now, another thing is what we saw was silver dropping 22% in 2 hours, but the fact that no circuit breakers were triggered, it just shows that, once again, this is done to protect institutions. Because when we see AMC go up, something that should benefit the retail, we see that it's being halted. And so to me, when these circuit breakers are utilized, it's to protect the institutions and not the retail. And so when it's not utilized and we're seeing massive volatility, it means that the institutions are benefiting from it. But a big thing is we have to understand physical silver shortage in the Kingdom of Saudi Arabia. Apparently, dealers are buying at $120 and selling at $136. I'm not sure how true this is. If someone can confirm it, it will be great. But if this is the case, it obviously shows the room for growth for silver as well. And another big thing is that if you guys aren't familiar, what happened to nickel in 2022, when the large commodity broker from China built a very large short position through JPM and he didn't have enough nickel to deliver, here is the chart. So this is something we could easily see for silver as well, and of course for AMC and GME, and it's still something that we're waiting on. As always, none of this is financial advice, so do take off the grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.